Is AI and competition going to kill Adobe? If you look at the stock chart and listen to the narrative on Wall Street, the answer seems to be an astounding yes. The stock has fell more than 50% from its peak in 2021 and trades at the prices last seen in 2019. The market is pricing Adobe like a dinosaur, about to be hit by an asteroid. They think generative AI and tools like Nano Banana, Midjourney, OpenAI are going to make Adobe obsolete. But there is a massive problem with that story. It completely ignores reality. While the market is trembling with fear, Adobe is having one of its best years in history. First, let's ignore the AI hype for a second and look at the cold hard cash. If Adobe is a dying company, somebody should tell that to their earning numbers. For fiscal year 2025, Adobe is delivering approximately $24 billion in revenue. That's over 11% year-over-year growth. And this isn't just one product. They have a huge catalog of products. Their digital media section, which contains Creative Cloud and Photoshop, brings in $18 billion. And the other segment, the digital experience one, which includes marketing and analytics, brings in another $6 billion. It shows how well the company is diversified. But here's the number that matters the most. It's not just the revenue, it's cash flow. Adobe is a cash flow machine. They are generating over $10 billion in operating cash flow annually. And because this is a subscription-based recurring revenue, that cash is predictable, it's compounding. So now that we see that Adobe is printing cash, but how much are you paying for the money printer itself? Let's look at the price to earning or PE ratio. Big tech companies with similar growth profiles like Microsoft, Intuit or Apple are trading at a PE ratio well above 30. Adobe is hovering somewhere around 20. If you look at the operating cash flow, Adobe is trading at roughly 14x its cash flow. That is a dirt cheap for a tech monopoly. In fact, if you run a standard DCF analysis, the fair value is likely over $600 per share, and management knows it's cheap, repurchasing nearly 6% of the outstanding shares annually. Let's address the bear case now. The reason the stock is cheap is because everyone thinks AI will replace the need for Adobe software itself. Why pay for Photoshop when I can just type a prompt into ChatGPT and get the desired image or video? Well, this view misunderstands the difference between the model layer and application layer. Midjourney and OpenAI provides the model. They generate the raw material, but professional work requires the application. This is called the last mile problem. Raw AI input or output are rarely client ready. You need layers, you need vectors, you need specific color grading. You need to fit it into a marketing campaign workflow. Adobe owns this workflow. Even if Google or OpenAI makes a better model, Adobe is the best positioned to integrate the model into the tools professionals already use every day. Plus, look at the unit economics. Generative AI is expensive. The compute cost per image is high. Adobe's SaaS model allows them to use AI as a value-add feature to keep you subscribed, while maintaining margins that pure-play AI companies can't dream of. What about Canva? What about Figma? Aren't they eating Adobe's lunch? Let's look at scale. Adobe is doing $24 billion in revenue every year. Canva is around $3 billion, while Figma is around $1 billion. Competitors are growing for sure, but they rely heavily on freemium users. Adobe dominates the enterprise. They have the corporate contracts. They have the big companies paying them, while these other competitors are chasing the free users. Canva is great for making birthday invites, but if you are a Fortune 500 company running a global marketing strategy, or if you are making some huge movies or games, you aren't using Canva. You are using the professional softwares provided by Adobe Creative Cloud. Here is the bottom line. The market is pricing Adobe as if it's a dead company. They are pricing in existential threat from AI. But the reality is, AI is likely a tailwind for Adobe, making their pro tools even more powerful. When you combine that with $10 billion in cash flow, double-digit earning growth, and a depressed valuation, you get a risk-reward profile that is very hard to ignore. Wall Street is scared, but the fundamentals say they shouldn't be. I believe in Adobe and don't see any immediate threat to their monopoly. And this is my thesis behind building a bull case for Adobe. What do you think? Let me know what you feel about Adobe in the comment sections.